Hello everyone. Good morning, and trust we're all doing very well. And how are you doing? Happy Friday to you. And depending on what time zone you are tuning in from, I wish you a good afternoon. I'm excited as always to welcome you to our final edition for the week of the Forex Morning Mastery, where we are going to be delving into the market for two major reasons. First of all, we do want to know how well the asset we are monitoring this week has been doing. Remember, we have been monitoring the USOILSPOT, the USDJPY, and of course the XAUUSD. So we want to know how well these assets have done so far. And secondly, we are going to be delving into the fundamental and technical factors around the respective market dynamic to have a better understanding of what is really going on in this market, and of course use that information to strategically position ourselves for the next move. And it's important for us to also understand the fact that today being the last trading day of the week, it comes with its own peculiarity. That is, being Friday, market participants will want to be rounding off their trading activities ahead of the weekend. And due to this, we might be seeing profit-taking activities like price action moving in the opposite direction of the prior leading price action. So all of this will be taken into account while we review the respective current market dynamic. So if you are a fan of any of these assets, you do not want to miss out on this session, as there is a lot of opportunity to capitalize on today. For those who are joining me for the first time, you're highly welcome on board. I'm very, very glad to have you around with me this morning, and excited to have you with me as we plan ourselves for the final trading day of the week. My own name is Sheriff Daramola, and we run this 3 times in a week: Mondays, Wednesdays, and of course Fridays, where we come together as a community to have a better understanding of what is going on in the market, and of course using that information to make our trading decisions. So once again, you are highly welcome on board, and I'm very, very excited to have you here with me. Feel free, do not hesitate to engage in the comment section. If you have any questions whatsoever, feel free and drop them in the comment section. I'm here and willing to be of help in that regard. So moving right into the business for today, as always, the first thing we normally do here is to keep tabs with the fundamental factors that are influencing sentiment within the US dollar market dynamic. And for those of you who have been with me for a while, you know how important this is. There is no way we want to be trading the Japanese yen, the crude oil, or the gold commodity without really having a better understanding of how the US dollar market is behaving right now. It will give us an insight on what to look out for when we go into this asset we are trading. And I think I'm having a little bit of internet itch at the moment, as I can see the economic calendar is taking some time to load up. Please, I would love to hear from you in the comment section. Can you see my screen? Can you hear me? I need to be sure that we are all on the same page. So I'm going to refresh this page and let's see if it's the internet or the page of the FX. I think it's the page of FX Trade, because this is loading now. It's taking some time. It keeps loading, and we need to see together what is going on the economic calendar from both the economies we are monitoring. So while that loads up, let's run through the US dollar market dynamic. And of course, what you see on my screen right now is the DXY, the US dollar index. And for those who may be the first time you're seeing or hearing this, this DXY is a chart that gives us an overview of the performance in extended period of time across all major currency assets. And from what we were able to capture here at the beginning of the week, after taking into account the character of price action in the last 7 to 8 weeks, we understood that the market is on a downtrend. And we can see how in the last 8 weeks, price action had evolved into a descending channel. We see after connecting the series of lower highs, we have the resistance line of a descending channel, and of course when we connected the series of lower lows, we had the support line of the descending channel. Now, something interesting happened during last week's trading session where we saw an attempt to break out of the resistance line. Though we saw the dollar drop during the first half of last week, but during the second half, the dollar began to recover and closed exactly around the resistance line of the descending channel. That was around the $97 level. And by the time this week opened, we were looking at the possibilities of either price breaking out the resistance line of the descending channel or respecting it to push price to the downside. Now, the former was what happened. We saw price break out of that resistance line at the beginning of the week to establish another trend line to guide our trading activities for this week. And look at what has been going on here since the beginning of the week. The market has continued to find higher highs, higher lows to give us a situation that looks as if the dollar is on the verge of continuing the uptrend scenario. Now, as it is, as we head into the final trading day of the week, I can say that the US dollar is strong, let me use that word, and supported by a strong labor market. Yesterday, we saw the jobless claim counts. In fact, that is what I was trying to open since morning, but I don't know. Let's try it one more time to see what's okay. Let's try it one more time. So, like I was saying, we saw the jobless claim count coming lower than what markets or the economies were expecting, and this showed economic resilience. It shows that the labor market is resilient at this point. Oh, thank goodness we have it here. So you can see yesterday, Thursday, July 10th, we saw initial jobless claim come in at 227,000, below the expectations, and of course below the. So this shows us that the labor market is strong. That means the economic is resilient. The U.S. economy is resilient at this point in time, further supporting the U.S. dollar. And while a few Fed officials support rate cuts, remember we saw the FOMC minute published on Wednesday. Most of the FOMC members, voting members, are holding back due to concerns about inflation, especially from new tariffs on Japan, Brazil, and other BRICS allied nations. And then the minute also went on to reveal that any rate cut would only happen this year, and only if tariff-related inflation proves to be mild or short-lived. Now, as the ongoing trade tension continues and global uncertainty, this obviously had keep investors cautious, but still leaning on the US dollar as a safe haven. And this obviously had helped the dollar continue this upward trajectory we saw started this week. So in summary, from what we can be able to come up with ahead of today's trading session, the fact is there is strong job data in the United States. We have a cautious Fed, and of course trade tensions are helping the dollar stay firm as we wrap up the week. Now, considering the fact that today is the last trading day of the week, what are the chances that the US dollar will continue? Well, if we look at things from a technical standpoint, it reveals how the market participants are currently thinking. And from what I can see here, this ascending trend line is going to be playing a significant role. Now, as long as price remains above this ascending trend line, its uptrend scenario is very much intact. So we shall continue to look for a stronger US dollar going into today's trading session. However, if we look at the technical perspective on the charts in the other way around, we saw that price just broke out of the resistance line of the descending channel, and there are chances that we could see price come back to retest it in an attempt to continue an uptrend move. Now, if this trend line here gets broken, it is very likely we might be seeing the beginning of profit-taking activities ahead of the weekend, as major key players in the market who had capitalized on buying the US dollar around the $97 level might want to be taking some profit before the weekend, and this could lead into a situation where price retraces back into the resistance line of the descending channel, maybe to continue an uptrend or even drop to the downside. So you see, we are at a crucial juncture. Now, with this understanding in mind, let's go into our charts, to our respective assets that we are monitoring for this week to see how is influencing that particular market. I see you, Jonah Aruna. Good morning to you. It's been doing very, very well. Glad to have you here. So the first asset we are going to be taking on is the USOILSPOT, of course. That's always the first asset we usually take on. And remember, at the beginning of the week, we saw price action break out of this range bound. Sorry, we talked about this last week, and then we saw the trend continue to the upside, though I missed out on the buy move. Let me scale down into the 1 hour time frame. That is our execution time frame. That was what we were using to navigate this market at the beginning of the week, right? So hold on a second. Let's see. Okay, so here we go. So this was what we were beginning of the week, and remember I told you that I missed out on the opportunities on Monday. We had the range bound structure at the beginning of the week, and of course you know how we do it. Whenever we have this kind of structure, we want price to break it out, and then we continue the uptrend scenario. But this whole breakout here happened during the Asian session, which is more or less in the middle of the night here in this part of the world. So I missed out on that one. And then I don't trade on Tuesdays. Of course, I also missed out on this breakout retest all the way up. Now on Wednesday, we were able to spot a resistance around the $68 area, as we saw that the buyers were losing momentum as soon as price got into the structure. And one of the things I mentioned here on Wednesday is that we are only going to be looking out for buying opportunity if price action breaks out of the $68 area, which obviously never happened. Then we also went on to talk about that if buyers find it difficult to break out of the $68 area, then sellers continue to maintain momentum, then a breakdown retest of the $67.30 level will be all we need to join the downtrend move. And unfortunately for me, sincerely, I just kept on missing most of the important moves this week. As I only trade on Mondays, Wednesdays, and Fridays. So Tuesdays and Thursdays are my breaks. Now, this whole breakdown retest here happened yesterday during I think about an hour into the New York session. We saw price as a $67.30 level, and if you remember vividly, I said that if price does that, we might be seeing a move to the downside, maybe back into the ascending trend line we spotted at the beginning of the week, where I will be positioning myself for the next move. And look at what happened here. Price action is back into that trend line, and since it tested that trend line during the New York session yesterday, we can see that the market is going through a consolidation phase, showing us that the price is back at a critical juncture. And of course, when we see a range bound like this, let me zoom in so we can see things more clearly. As you can see, price is confined within the $66 level, and of course the $65.62 level in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, and 20. Let's say 19 hours. The last 19 hours, the market had remained confined within this range bound structure to emphasize the prevailing uncertainty at this point in time. And when we have this kind of situation, we have no other choice than to exercise patience and look for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, before we go into this technical detail, we also need to understand why all of a sudden, or let me say out of the blues, we saw a drop in oil prices. Remember at the beginning of the week, we were talking about tensions in the Middle East, including the deadly Houthi attacks, which has been providing some support for buyers in the market. We also talked about the new wave of tariffs from the US, including a 50% rate on Brazil and the likes. And all of a sudden we see price drop. Well, it could be from two things. One, market participants were doing some profit taking after enjoying that massive move to the upside. That is one. Then if we shift to the fundamental factors, we saw during the course of the week, OPEC Plus announced a big production hike. That is 548,000 barrels per day for August. That's massive, and this is raising fears of too much oil flooding the market. And when supply increases, what happens? We all know what that means. It means that prices will drop because of the availability of this product in the market. Then to add salt to injury, we saw the US oil inventory jumped unexpectedly, with stockpiles rising by over 7 million barrels instead of the expected drop. That signals weaker demand or excess supply. Now, as it is right now, the market is caught within a limbo. In short, we have more supply, more inventory, and more trade tensions, which is balancing each other. But it appears geopolitical risk may be keeping the market alert, and as a result of this, we can say the market is currently in an indecisive phase. Will this be the next leg of the second leg of the bullish trend that started this week, where price breaking out of the resistance line will be all we need to feel comfortable buying the US oil spot? Or how are we going to see a breakdown retest of both the trend line and the $65.62 level to continue the downtrend move. So for me, at this morning, I kept on a bullish bias. In fact, if you look at the bottom of your screen, I already have a buy position running on the US Oil Spot, which is currently in a loss of about 25 pips thereabouts. And I'm still of the opinion that I want to hold on to see if the support line here, the support line of the range bound at the $65.62 level, we hold by pressure. But if that is not the case and we begin to see below this area, then I will have no other choice than to close the buy position and then join a sell. So let's see, play around this area. It's a simple trading setup we have here going into today's trading session. Let's see how this is going to play out. Of course, if there is anything new, I will be updating us on my Telegram platform. So that is my simple view on the US Oil Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So I guess we are all on the same page. No questions. Jonah Aruna, do you have any questions? All right. So it's important we mark out the structure. So this is what we are going to be using today. We have a range bound structure, a $1 range bound. Is it up to a $1? I think it's about 40-cent range bound structure approximately. And then we want to wait for a significant breakout of structure to emphasize the direction where price or where the sentiment is shifting to. So I remain bullish at the moment, considering the fact that price remains around that ascending trend line. But if the support line of that range bound breaks, then we will, and selling pressure persists below this level, then we will be joining a sell. So I will take some time out for this to happen. It could take about 2-3 hours before we can jump into a sell. That is if sellers continue to push price below the $65.62 level. So I wish us all the best of luck on the US crude oil spot. So moving on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the USDJPY, and of course on the USDJPY as well, just like what happened to me on the US Oil Spot, I wasn't able to capitalize on those important moves during the course of the week. Due to the timing of my trading sessions. I don't trade on Tuesdays and Thursdays. and most of these moves happened on that particular day. The one that happened on Monday happened during the Asian session, and it happened so fast that the market did not come back to restructure to give us an opportunity to join that trend. Remember, at the beginning of the week, we had this range bound structure where price was, for the first 6-7 hours, market was confined within the range bound of 144.650 and 144.225 before that breakout happened, and market never came back to retest that structure, and then we saw that continue up. Most of us here who are trading the Asian session probably captured this move, but for me, I missed out on that one. And during our Wednesday's live stream, we were looking at a consolidation, right? We had a trend line, this one right here, and we were saying that to buy, we want to see price here, which never happened. We were expecting a breakout of the 147.2. That never happened on Wednesday, and that we're looking to sell if price breaks down the 146.300, which happened. Moved stop loss to break even and got taken out at break even on that one. So I really did not have any trade on the USDJPY this week. And moving into today's trading session, it appears that it's from what has been going on since the beginning of the week, the uptrend is very, very strong, and it appears that the market had no time to retrace to carry a lot of people along with the trend. And this further emphasizes how the trade tensions are weighing on the Japanese yen. We have a stronger US dollar and a cautious Fed, which keeps the pair running. And since the Asian session, the last 8 hours or so, the market had remained confined within a range. So we have a new range going into today's trading session. And one interesting thing about this new range is the fact that it is sitting on a temporary ascending trend line. Now, this trend line here captures the character of price action in the last 48 hours. So the trend is still very strong, and we have a consolidation after a trend which has a high tendency of inciting a uptrend continuation pattern, something like this. And of course, you know how we use our trend lines, especially the ascending trend lines. As long as price remains above them, we want to continue to look out for patterns and structures that support buying ideas. In fact, I want to place a buy right away. I'll place a buy right now, and I'll tell you the reason why that. Now, if you look at the technical details here, you can see sellers are finding it difficult to break the 146.800, and the last 3 hours here shows hammer candles. We have one here, and one here. And from a theoretical standpoint, a hammer candle gives us a sign that buyers are still present in the market. That's from a technical standpoint. Then if we look at the fundamental perspective, Trump just recently slapped 25% tariffs on Japanese goods, which is starting in August. That's August 1st. But hinted, that's one interesting thing about Trump, hinted that they could go even higher to 30 to 35%, and this of course has created a lot of uncertainty for the Japanese economy, which tends to weaken the yen at this point in time. Though Japan says it's still open to negotiations, but the tough talk from both sides is keeping market cautious at the moment. And meanwhile, within all of this scenario, within all of this uncertainty, the US dollar is still holding steady, backed by the Fed signal that there will be no interest rate cuts in the short term, and this is keeping the USDJPY from dropping at this point in time. So my instinct feels buying at this point in time is looking more reasonable, and the chances that the resistance line at the 147.200 will be broken today is very, very high. So I would like to place another buy stop order above the 147.200 to maximize the uptrend scenario here. So I'll place another buy stop order above the 147.200. Now, you know how we do it in this community. In as much as the chances that the trend is very bullish at this point, we always try to keep a grounded approach. That means we always also consider the potentials that the opposite direction could also come into play. And if that happens, where will be the most important area for us to sell? Now, considering the fact that we have an ascending trend line, we definitely want to see the ascending trend line breaking to the downside before we can consider selling. Maybe those who had capitalized on the uptrend since the beginning of the week may want to start taking some profit ahead of the weekend to be on a safer side. And if that is going to be the case, down retest of both the 146.600 and that ascending trend line will be a sweet spot to join a downtrend move. I doubt if that will happen, but if it does happen, it will be the best area for us to start considering selling. So if you're a seller of the USDJPY, maybe what you're looking at is for sale. The only area at this juncture is price breaking down and retesting the 146.600 area. So it's a simple trading setup. Let's see how this is going to play out. I'm leaning towards the upside, and I have a very strong feeling that the 147.2 will be broken. And if there are any economic events today, there are none except for goals-based speech, which had already happened. So there are no major events today. So I guess the market will be building their sentiment around the fundamentals of the tariff on Japanese good, the Fed signal that there will be no interest rate cut anytime enough is able to give the market an insight of where price is likely going. So let's see how this will play out. I wish us all the best of luck on the USDJPY. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions or further clarifications before we move on to the final asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I guess we are all on the same page, right? I told you I have a buy position running already. I just triggered it considering the fundamentals and technical understanding of the current market dynamic. Then we're looking to add more at the break of the 147.2. So I already placed another buy stop order around that area to capitalize, to maximize the potential of the uptrend scenario. So let's see what happens from this particular juncture, and if there is anything new as we head into the New York session, I will be updating us on my Telegram platform. So I wish us all the best of luck on that one. So moving on to the final asset on our watch list. So the final final asset on my watch list for this week is the XAUUSD, popularly known as the gold spot. This is my favorite asset amongst them, and I can say for free, most of the profit I made for this week actually all came in from the gold commodity. And briefly, what we saw at the beginning was the fact that price action did break out of the resistant line of the descending channel, and ever since that breakout happened on was it on Monday? Okay, at the beginning of this month, last week, as soon as the breakout happened, since the breakout happened, price action had continued to trade above the resistance line of the descending channel. As you can see, multiple retests of that structure and using it as a price higher throughout the course of this week. And by the time this week started, we initially had a range bound structure where price for the first 20 hours of the week, the market was confined within this range bound that is between the 3,342 and our key level for the week, which is the $3,310 level. And I can remember that immediately after the live session on Monday, what did I tell us on Monday? I told us we are going to be buying the breakout of the 3,310, right? And then we bought it all the way up before the market dropped to the downside. Then on Wednesday live stream, we had a new structure on the 15 minutes time frame. For those of you who are following me on my Telegram and TradingView platform, I did updated us with a new structure immediately after the live stream on Wednesday, and I think I have it right. Okay, this is it right here. So this was the setup we were banking on Wednesday's trading session. So we had a descending trend line, right? And then we noticed that despite the fact that the market was downtrend, that is despite the fact that sellers were keep pushing price to the downside, we noticed how the 3,285 became a barrier for sellers. Every time sellers come in here, we saw our buyers negated bearish pressure and used it as a platform to push price higher. And this was exactly what we were banking on. So we had two options on Wednesday. We said we will sell if price breaks down and retests the 3,285, which never happened. And then the other option is that we are going to be buying the breakout of the 3,298. And of course, we saw price breakout, retest the trend line, and boom, we saw price move all the way to the upside. And in fact, if you look at my history here, I had about $94 from that particular move on Wednesday. This is my history here. I had $94 from that particular move, and like I said, most of my trade this week is only coming from the gold commodity. I missed on the US oil, I missed the USDJPY move, but thank goodness I was able to take the XAUUSD and I wrote it all to the 3,340. Yes, I wrote it all to 3,340. I think this 8 TP just this morning. And for those of you who were part of this profitable journey, well done and kudos to you. Now, as we head into the final trading day of the week, in short, we have mixed signals from the Fed. Trump's aggressive trade moves and strong economic data are all tugging at gold from different directions, keeping it supported range bound for now. Now look at the structure here. For those of you who are following me on my Telegram and TradingView platform, you must have seen the structure, as this is what I'm using to navigate this market today. Now the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 hours, price is confined within a range bound. So we are looking at some repositioning ahead of today's trading session. Now remember, today is the day of the week, and there is always this psychological peculiarity, especially when we have a very strong move throughout the course of the week. And of course, it has been a little bit bullish this week, and we could see a situation where market participants, out of uncertainty, will want to start taking some profit ahead of the weekend. So I'm not going to be taking that off the table. Now, with the range bound structure we have here, we obviously going to exercise patience and wait to see if price will break down, retest both the trend line and the support line at a 3,330 to send a move to the downside. Or are we going to be seeing price break out of the resistance line to trigger a buy position? I'm going to be very, very careful in this particular trade, as I do not want to lose out on what I have made so far this week. If the trading opportunity comes, I will take, but if I don't see a clear direction, I will just step out and just close for the week. But I didn't understand what is driving the gold market at this point. Like I said, from the Fed, the release of the Fed's FOMC minute on Wednesday, we saw that only a few Fed officials want rate cuts this month, while most still worry about rising inflation, especially due to the Trump's new import tariffs. And this tariff uncertainty also is serving as a support for the price of gold. I told you about the 50% tariff on Brazil, and he also went on to hint that it's going to be putting more for BRICS aligned countries, and that's making traders nervous at this point. And when there is this kind of uncertainty around tariff and trade tensions, gold usually capitalizes on this. And just looking at the structure here, I think I'm tempted to place a buy, especially as you can see the last 1 hour price had continued to oscillate around that ascending line, which lines up with our trading idea that as long as price remains above an ascending trend line, we want to be looking out for patterns and structures that support buying ideas. So I'm tempted to place a buy right now, considering the buy pressure I am noticing above the ascending trend line. So I just placed the buy position. About other factors here, we will not ignore the fact that the US dollar too is very strong. Fewer people fight for unemployment. We saw this from the initial jobless claim count yesterday. We saw it 227,000, which is way lower than what market participants were expecting. They were expecting 235,000, and of course this was also lower than the previous month data. So this shows that the economy is still very strong. The US labor sector is still resilient at this point, and that's keeping the US dollar and treasury bond yield high at this point in time, which might tend to cap the upward trajectory. So while we are looking at an uptrend situation, we need to also consider the fact that the US dollar is strong at the moment due to a stronger US economy, and of course Fed officials are still wary of tariffs, which could push prices up, and even though the overall risk of stagflation seems to be fading. So we need to keep a balance around this area. So we have a structure here. So with what I'm seeing here on this chart, I want to remain bullish at this juncture. So like I said, I just bought now. So let me mark out the structure here. We have the $3,334 level, right? Let me mark it out, 3,334 level, as you can see here. And then as long as price remains above this, look at the ascending trend line. For those of you who are following me on my TradingView and Telegram platform, you're familiar with this. So we can see the ascending trend line here. We can see the 3034, an important confluence around this juncture. So as long as price remains above that area, let's maintain a bullish bias. And of course, we want to be having a buy stop order above the resistant line of that range bound at the $3,344 area to maximize the uptrend continuation. So I'm going to be placing a buy stop order above the resistant line. Let's see if that is going to be doing very well for us today. Now, like I said earlier, we cannot ignore the potentials that sellers can also come in. I just told you about how strong the US economy is following the US job data we saw yesterday. And remember, the NFP last week Friday also showed a whooping number as well. And if we consider that, it's putting the Fed in a tight corner where the chances are not on the table at the moment, which obviously favors the US dollar. And if the US dollar continues to rise in value, the price of gold becomes more expensive for other currency holders to buy. And if that is the case, the demand for gold may reduce. And if it does reduces, we could see a situation where the ascending trend line here could get broken, retested to incite a sell-off ahead of the weekend. And this sell-off could players in the market who had bought the gold to start taking some profit off the chart, and that could lead to a massive downturn. So, but before I can consider selling, I like to see some confirmation around both the trend line here and the 3,330. So if I see price break down the 3,334 and it comes back up here, and buyers are finding it difficult to maintain momentum above the trend line, that is, we continue to see selling pressure here, then I will have no other choice than to join a sell and maybe add more sell positions at 3,330 level. So that is basically how I'm going to be navigating the gold market today. I just hope that it gives me more profit as I head into the final trading day of the week today. Like I told you, gold is the only asset that gave me profit this week. So let's see how the market is going to play out. Of course, I will be updating us accordingly on both my TradingView and Telegram platform as I continue to monitor price action around this particular structure. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking 5-10 seconds off. Let's see if there are any. And don't forget to give the video a thumbs up. Your likes are valuable to me, and of course it also helps the community to grow. So if you have found this content helpful, useful in making your decisions today, why not give it a thumbs up and support the community? And thank you very much as you do so. So I'll take a 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon. All right. So I guess we are all on the same page, right? Thank you for the love. Thank you for your support. I really appreciate it. Let's make the likes tally with the number of people on board. There are still some of us who are yet to click on that like button. So please do so. So in the absence of no questions, I want to admit that we have come to the end of today's Forex Morning Mastery. And during the course of this session, we looked at the three financial instruments I am monitoring for the week. That's the USDJPY and of course the gold commodity. And I did went on to share with you simple trading setups that we are going to be using to navigate the market today. And I do hope they will be very, very helpful as we head into Friday's trading session. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from our discussions today. If you did, you might want to be part of our subsequent editions. The next one is on Monday, same time, 8:30, 9:30 a.m. West African time, as we come here again to review the market and prepare ourselves for the new week. And if you're yet to subscribe to the channel, please do right away. There's going to be some interesting information during the course of the weekend. For those of you who are following me on the channel, I just launched a series, Rebuilding the Trader Within: How Identity Impacts Your Trading. I dropped a video yesterday or 2 days ago, which is my episode 1. I'll be dropping subsequent episode 2 as well, and this is going to be about inner workings, and with time you get to understand what this means as I elaborate further in them. Then I'm going to be dropping my insights on the gold commodity for next week during the weekend. Stay tuned in on that one. Then the Forex market prep is also coming up on Sunday, where we all come together here to have a preparation ahead of the new week. And it comes in on Sunday, Sunday evenings, but I will be giving us timing on Sunday morning due to issues I expressed during my previous session. So I wish us all the best of luck. I wish you a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.